All right, everyone, here we are with ticker symbol Dkng, Draftkings Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back, and let's jump into this chart. So, funny enough and interesting enough here on this chart, we could see that Draftkings actually rose up, touched the 50-day moving average, it slightly fell, and it actually rose up again, and it touched the resistance. So, resistance hasn't changed and support slightly changed. This has been in a very volatile day of an up and down, but at the end of the day going in a neutral sideways direction where honestly there's some important things to pay close attention to for the next coming days. Is this going to break through support and hit newer lows? Obviously the lowest point in the bearish run was way down here at 41.71. And also when I zoomed out and before this bullish run continued and so forth, we looked at obviously the numbers way down here at 40.40 and so forth. But one of the most important things right now is the fact of this support and the lowest point recently hit right here at 41.72, 41.71. And let's go ahead and move our new support level and our resistance. Very interesting enough, did not change. It actually hit it and it got rejected from there. So super important to keep that in mind, that resistance was rejected just like yesterday and it hit lows again and it pulled away from the 50-day moving average of 43.69. So currently we're below the 50-day moving average, so that's super important to keep that in mind. 43.69 needs to be broken through by the bulls to get back into bullish territory, and as long as we're below it, the bears are in control. So the bears are going to want to continue to bring this one down. It's currently at 42.49, and if they break through the support that is formed here, right, this is one of the lowest points in this slight bearish run, that is 42.29. So the bears are going to try to break through that, and I want to emphasize to all investors, pay close attention to how it reacts between that and obviously 41.71, 41.72, in that area, give or take, and look at what's going on in between and how quickly is this moving to newer lows. Because if it breaks through 42.29, we're already in bearish territory, and that's just getting deeper into bearish territory, confirming that the bulls are losing control and the bears are gaining leverage. They've already gained leverage here. That's just going to signify more control and gain of power over the chart for the bears. So we're going to have to watch this one closely. If it breaks through 42.29, keep that in mind. Pay very close attention to how this stock is reacting. Now, the bulls are going to want to break through first, obviously the 50-day moving average of 43.69. Super important number, because that is the number that's going to let us know on what side of the chart we're in and also who is dominating the chart. Obviously, we're in bearish territory. The moment it gets crossed, the bulls are starting to gain control. But the bulls need to continue to work their way up after breaking through the 50-day moving average to the first resistance level in bullish territory. It got rejected yesterday, got rejected today, and we're going to have to see closely if this actually gives a chance for the bulls to work their way back up and break through it, or it gets rejected from there again. That is 44.96. Super important number right now due to the fact that it got rejected yesterday, it got rejected today, and 44.96 is the first resistance level above the 50-day moving average and the highest point before this bearish run here. And the bulls need to break through it to turn it into a support, pull away from the 50-day moving average in an upward direction to hit newer highs and newer resistance levels. So super important for the bulls to break through that. If they can break through that, they accomplish two things. They broke through the 50-day moving average and got back into bullish territory, or also they also did the one thing that the bulls need to do, which isn't just breaking through the 50-day moving average. That's very important, but the second thing is breaking through the first resistance level and confirming to stay in bullish territory and turning it into a support to pull away from the 50-day moving average in an upward direction to hit new resistance levels and newer highs. So super important for the bulls to break through that. Again, I want to emphasize to all investors, pay very close attention to how this reacts if it breaks through 42.29 and how quickly it starts to hit newer lows if it breaks through that support level. As always, I hope that with these cues, you guys are well equipped for tomorrow's trading day to make your own rational decisions as investors. And if you feel encouraged or inclined to subscribe, you're more than welcome to. Please do so, and don't forget to click on the bell. By clicking on the bell, you turn on the notification button to not miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button to let me know you watched this. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.